Okay, so today's webinar is on fibs. It took a while to get to this, but let's do it. Finally, let's get it done. So, first of all, does everyone here know how to draw fibs, or have you guys used fibs, or do you know what fibs are? Guys, please let's make it interactive. I want to see people typing, else we don't have to do this if you already know it. So let's make it interactive and not waste anyone's time. Christina knows. Yeah, I know. Everybody else, do you guys use fibs, or do you know what fibs are? Ross was saying he knows about fibs, but he does not know how to properly draw and interpret them. DTV is saying I tried. Okay. So to start with the basics, Fibonacci was some guy who basically came up with universe natural retracements for everything, that everything continues in a way, but it doesn't just go in a straight line. It has to retrace to continue or to grow. That's the basics of fibs. That's what fibs are. Now, those were applied to trading, and we're going to look at how we draw fibs. Now, the most popular ones out of fibs are Fibonacci retracements. Basically, you draw them whenever you have, if it's an uptrend, whenever you have a new higher high, that means there was a break of the previous high, right? So you either draw it there, or if it's just a trend continuation, you can use another type, which is called fibs extension on TradingView, expansion in MT4. We never really use them, mostly use Fibonacci retracements. So the best way to draw them, now there's thousands of ways. We're not going to comment that somebody's way is wrong or somebody's right. We're going to share with you how we use fibs whenever we draw it. So, and a lot of people were asking about time frames, what time frames are best for fibs. You can literally use it on any time frame as long as you know about higher highs and higher lows. It doesn't matter what time frame you're on. And if anybody has any questions, please type it out or stop me so I don't just keep talking, and like I want everyone to be caught up. All right, so we're on the GU here. And so as we see, the markets were coming down, whatever, and then finally buyers start stepping in from here, right? Everybody see that? Buyers start stepping in from here. Now, so if we draw Fibonacci retracements, so this right here is the most recent swing that happened, because this is where the buyer stepped in, and then the buyers took control of the market. I'm not going to go in details of buyers and sellers, but we're only going to be focused on the Fibonacci. So does this make sense to everyone that buyers started stepping in from here and then they took over? So this is where buyers made a breakout, you can call it. A lot of people call it broke structure here, whatever you like to call it, but this is where buyers started stepping in. So this was the most recent swing, and this is the highest buyers came before sellers stepped in, right? So this is how you draw your Fibonacci from this most recent low to high. In this case, we're drawing from here to there because this is the buyers stepping in. If we drew it for sellers, we would simply take it and draw it this way, upside down. So nothing complicated there. So we draw this here. Now, in MT4, when you draw Fibonacci, you'll get these numbers here. Can everybody see those, or do you want me to zoom in? Yeah, everyone can see. Okay, great. So this move is basically from 0 to 100 or 100 to 0. And then these numbers are simply the ratios of the retracements. So these are basically heads up when you draw the Fibonacci that these are the possible numbers or zones from where the price can reverse or where the price should reverse to, and so forth. So 23.6 is the first ratio, but about 90% of the times this gets overlooked. A lot of times it's not respected. 38.2 is respected a lot of times. 50 is an important one. 50 can a lot of times cause in reversals, and it's respected almost always. But 61.8 is like your golden ratio. That's almost every time gonna reverse the market, or it will be respected almost every time. If you want, you can write this down, or I'm not sure you can remember it, but 61.8 is like your golden ratio. 50 and 38.2 are important as well. 23.6, it only comes into place, it only comes into play very rarely, not very often. Now, so once we draw these Fibonacci here, now how many of you, let me ask you this, how many of you have used Fibonacci in the past? Or let me put it this way, how many of you like Fibonacci? Van likes it. Christina, you don't have to answer it, that's fine. All right, so everybody here likes Fibonacci, I'm guessing that's why you're on the webinar. All right, now, how many of you have had this problem? Like, first problem, I know it's of drawing it, that should I draw it from here? Should I draw it from here? Should I draw it from there? And then should I just compare all of them and spot the confluence and trade that? Because it's a whole lot of mess with Fibonacci's that way, right? Now, one thing you need to accept first, just because you like fibs, don't defend it. Accept first that it can be a mess if you don't do it properly. Now see, let me give you an example. Now in this case, see, this is where this move happened, right? This is from where the buyer stepped in, so we drew it here. Now, if I remove this, and I drew it from here, all the way till there. Now see, a lot of people are gonna say, this is correct as well, right? Because it seems to be respecting 61.8 here. This sort of touched the 50, right? But how do we know if this is correct or this is correct? How do we know that? Or should you draw both and then just spot confluence and trade that, right? So it can be a whole lot of mess if you don't do this properly, which is why the way we use it is from where the most recent breakout happens, that's where you draw it from. Be it an uptrend or downtrend. If it's an uptrend, that means whenever a new higher high is made, and a downtrend whenever a new lower low is made. So that's how you draw it. So this case, we did it from here. Any questions so far? Anybody? Any questions so far? All right, good. So we draw it from the most recent breakout, right? Because this here is responsible for the breakout. It's happened from here. So we draw it from there. Now, so another thing with this, now we know it's going to retrace, and these are your potential entries. Once it's retracing, you can buy here, you can buy here, 61.8, and then your potential take profits would be up here, right? For all those, because this was an uptrend break. Now, if it was to reverse all the way, then you know it should come down here, which in this case it didn't, because buyers actually made a new break, but we're not talking about that. So with fibs, it all depends on these numbers, that these are your potential entries and take profit zones based on the retracements, right? Now, let me ask you guys this. How do you know then you see the sellers are coming down here? How do you know they're going to touch 61.8 and actually respect that? So how do you know if you can buy it here, or is it going to continue keep going down? That's another thing that's a bit of a mess, right? Because you never know. So this is where you can use your momentum, and that would help you to decide if you should buy or sell. Now, how many of you know how to gauge momentum? Like, be it those Elliott waves or any other method you like to do it. But in anything, it's usually 3 waves, right? So let's combine that with fibs. And another thing we need when we draw fibs, it's your fibs are basically a form of support and resistance, but it's also important to draw your true support and resistance on the chart. So in this case, we have support and resistance right here. And look at that. So that's being respected. That's one thing. Now, if we combine this with your momentum, then you're going to know exactly at which point to execute and sell or buy. So we see the buyers were stepping in from here, and this is where we drew the fibs, right? Now, if we see this, they went up once and then retraced, and they went up the second time, retraced even less, and they went up the third time even more, and then they retraced that's almost 100%. And now at this time, they're going up the last time, and then you see this exhaustion here. Now you see, now here, this whole story is making sense because the momentum of the buyers is dying out, and then it's also touching 23.6. So at that point, if you hit the sell, and you don't know where to take profit, right? Now you're hitting sell here. Now you know your fibs were in an uptrend because it was a bullish breakout. Now you're selling here, so it's supposed to retrace, but you don't know where you should take profit, right? But in this case, the major thing stopping you is 65.8. If you want to be extra cautious, your take profit should have been 50 in this case, because you're selling here and it's a bullish breakout. So your first take profit would have been 50, second would have been 61.8, and third, of course, would have been the support and resistance. In this case, all 3 were hit. So that's how you want to combine the story of momentum, fibs, and support and resistance, and you'll know exactly at which moment to sell. Let's think about this. If it touched the first time, let's say you drew this, or you just drew it till here, let's say, before you even saw this move, and it retraced a little bit without touching anything, it continued up. So that would have resulted in you taking so much heat, right? Does that make sense what I'm saying? If everyone can just let me know that whatever I'm saying is making sense. All right, let's keep going. So this is how you wanna use it, because fibs are great, but how do you know that it's gonna touch it and reverse, or if it's gonna touch it and keep continuing going up? See, in this case, if I remove my support and resistance, right? And let's say this is a live market here. Right here. Okay. Now, see, this was coming down. Now, let's say you combine fibs with your momentum. You saw that buyers were coming in and they were losing momentum, and then you hit the sells here. because now the story is making sense, right? See, a lot of people would have bought at 38.8, 38.2, because for them, it's like, oh, it's coming back, touching it, so let me buy it, and I'll take profit at 0. But in that case, the story's not adding up because sellers are just stepping in, so they still have momentum. So how can you buy against them, right? So you just have to combine it with the momentum, and it's going to be a lot more easier for you to understand that at what point should you sell or buy. But if you were hitting sells from here, yeah, a lot of people might have thought that, oh no, it's in buying, that buyers are in control or whatever you want to call it, and it should be going up because it was respecting 38.2 and it's bouncing from there. So a lot of people would have bought here and they would be hoping to take profit here. That's how it usually works with fibs, right? But that story doesn't add up because the buyers coming up, they are losing their momentum, right? Which is why if you sold here and then you took profits respectively, the first target would have been 38.2, second 50, third 61.8. And 61.8 is like the golden one, which most of the time gets respected, like most of the time. But now see, this is what I'm saying. Now, let's say you've mastered how to draw fibs. You know to combine it with your methods of gauging momentum. I just showed you a quick overview of Elliott waves, but it's up to you however you like to use it. But now look at this. This is coming down so fast, right? 61.8 is broken. Now, anybody who would look at this, they'll be like, oh, 61.8 is completely broken. It's going here. And they're all jumping on the sells. They're all just jumping on the sell. They're like, it's going here. I'm going to take profit here. Let me just sell everything. I'm going to be rich today with this trade. That's everybody's mindset at that point. And then they jump in and they keep selling. And then this happens. This is what happens then. And this crushes people's dreams right there. People start doubting, oh, trading's not for me. I cannot do this. Or fibs are garbage, or my broker's garbage. People start blaming everybody, right? But if you were just a little more cautious and you cared enough to draw your true support and resistance there, this wouldn't have been a surprise to you. And you wouldn't have sold at that candle break of 61.8. You would be like, okay, it's just touching the support and resistance. I want to confirm if it's going to break that. And then you would have been smart enough to buy at the next candle. And at this point now, since it's bouncing from 61.8, almost always your take profit is going to be up here. And look at that. That was easy. 100 pips. And we're doing this on the hourly. And just in case anyone's wondering, fibs work across all the time frames. We'll do one more example on some other pair and some other time frame after this, but is everything making sense so far? Anybody has any questions, any concerns, comments? Any questions? Is everything clear? Christina, shut up. User saying, how did you get that support? If you're not sure of how to draw support and resistance, I suggest you check our webinar on Facebook. We don't have enough time to cover support and resistance right now, so you can check out our webinar on Facebook. But in that zone, that's our true support and resistance. You can double check it if you like, and look at that. If I scroll back, support, 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 and that's enough confirmation. I don't like to scroll back too much. Awesome, awesome. Is everything clear to everybody else so far? Roscoe is saying we use price action with fibs. Roscoe, let me ask you this. What's the difference? Fibs are basically price action. Fibs is basically support and resistance and price action just combined with universal retracements. So no matter what you're using, it all comes down to price action. Because see, if you simply, let's say you didn't care about the momentum here and you simply just bought it at the first touch, you can see it yourself here, that went against you, right? But if you combined it with the momentum, you would know that this buy is going to be short-lived because buyers are dying and sellers have to do their turn for buyers to continue, right? And then the same thing happened. Now 61.8 almost always pushes it till there, so we took profit there. So see, in this case, this was easy 120 pips if you bought it at this, or if you waited for the confirmation. So let's say you bought at the next candle here, so you would have got easy 100 pips. And if you sold here, and you could have taken profit respectively, first at 38.2, second at 50, third at 61.8, fourth at support and resistance. Now, if this got broken, then we know it was coming down here. So it's all combined. Price action is nothing different. It's something you need to be working comfortably with everything else. So whenever we use fibs, we want to combine that with everything else, because otherwise, how are we going to know that, okay, just touched 50. Now, should I buy it? Should I sell it? Like, what do I do? So we just want to combine it with support and resistance, put your true support and resistance, and combine it with momentum, and it's going to be a lot more easier. Sorry. All right. This makes sense to everyone? All right, let's do another example. So we were on the hourly. Let's maybe go to Christina. What pair was it?
Sorry, I couldn't find the chat screen. UJH4.
Oh, here. Okay. All right, guys. So we just did GU on the hourly. Let's do one quick example on UJH4. And then we'll call it a day. All right. So now in this case, see, the sellers were coming down, and now from here, the buyers are stepping in, right? And they did go on to make, because for the sellers, the last swing was this from here, right? So the buyers crossed that, which means buyers actually made a higher high if you're looking at from here. So if we draw fibs from here till there, well, actually, it'll be till here. Now, so again, we're going to do the same thing. Let's try to gauge momentum and try to make sense of it. Now we know it's a bullish breakout again, and we're on the H4. So it goes up, comes all the way here, right? Now it retraces, and it looks like it bouncing off of 23.6. But now, look at this. Does everyone see this huge wick over here? Right? Now, before this candle would have closed, this would have been a big red candle, right? It would have been a massive red candle. And then everybody would be thinking, oh, it just broke 23.6, and it actually broke 38.2, and everyone would be jumping on that sell, right? Everyone would be jumping on that sell because this candle right here would have been a massive red candle before it closed. So can anyone tell me what piece of information is missing here that if I put it, this wick's gonna make sense? Can anyone tell me what would have saved us from getting trapped in that cell? There's just one thing missing on the chart. Well, anyone except Christina. Okay, Khan's saying SNR. Anybody else? Or does everyone agree with Khan? Everyone's agreeing with him. Now, see. So, if I draw this support and resistance over here, which is just below the 38.2, now does this make sense to everyone? So you see how your broker didn't screw you up, the trade didn't go against you, it was nobody's fault, it was just if you simply had your major support and resistance and you waited for the candle to close, you would know that you should be hitting the buys at the next candle and not selling at this candle. And if you bought here, that's your take profit, and it was easily hit. Look at that. 83 pips, 85 pips easily. And people who sold here, you can see that it never even went in their direction whatsoever. So you see, the story needs to add up. Now, this was just one swing, very slight retracement. Second swing, a little retracement. Third swing. Now, expect UJ to come down again, maybe do one last push, and then it will go down and retrace up to 50 or 61.8 or simply just till SNR, and then either continue up or down depending on how the market's moving. But you cannot expect it right now to just continue going up because the buyers are slowing down. Because see, if you do your waves, look at this. It came up the first time, it came all the way up, and then it just retraced slightly. Second time it came, it retraced a lot more, right? Now third time, it couldn't even cross his own previous low. So now, when the market opens, this is gonna go down. Maybe it might go up to trap some buyers first, but eventually it's gonna go down up until 23.6 for sure. So that's a trade for your market open right here. Feel free to take it and share it in the group if you guys like, but UJ is gonna go down. It might just push up to trap the buyers, so don't get trapped because the story has to make sense. Don't just be like, okay, it touched one of the retracements, now let me buy it or sell it. Just make sense of the whole thing. And always wait for the candle to close before you consider that candle in your analysis. Because if you didn't wait for this candle to close and you didn't have your support and resistance, you'd be trapped in the sell. And then you can see what happened to that sell. But if you waited for the candle to close, this was a beautiful buy. You could have bought here, and it was easy 90 pips. So, are Fibonacci retracements clear to everyone? Any questions? The meeting's about to end in 5 minutes, so if anybody has any questions, please feel free. Christina, did we miss anything if you want to add something?
No, it's good.
All right, everybody's clear. See you guys in the chat then. All right, guys, have a good day.